John, obviously the backward-looking stuff we get, it was grim, it was bad. Take us through what we know going forward. How does Disney's path forward look right now to you?
In the quarter they just reported, you only saw a few weeks of the impact. So the June quarter is going to be dramatically worse. As you said, the parks are going to be closed likely for the entire quarter, except for Shanghai, which is going to open on Monday. We don't expect sports to come back. We don't expect the box office to make any meaningful contribution. So like all media companies, it's really the June quarter that is going to be, really the worst. And then we expect some gradual improvement, but very gradual as we look into the back half of the year.
Yeah, how much of an improvement do you see, John, when they get the okay? And I know the Shanghai Disney is opening up next week. When you get the okay, Disneyland, Disney World, you can reopen. What's your expectation about how many people are coming through the doors, about how many people are allowed through the doors?
Yeah, well, we heard from Disney yesterday that in Shanghai, the government there has allowed them to open at 30% capacity. They're actually going to open up with much fewer people, but 30% is still 20,000 people. That's a lot of people. But our math suggests that on a segment basis, they can't make money at that level. So we think you're going to see something similar at the U.S. parks when they open. And we don't have them opening until later in the year, but I think it's going to really depend on local conditions. So Florida Disney World could open sooner, also with capacity restrictions. But we don't think that they're going to get to a point where they can be profitable until fiscal 21.
Yeah, and by the way, a big shout out to all of our crew here at CNBC, all the tech staff behind the scenes making this work, because I watch, if you turn on ESPN, they're dealing with the same stuff, and even harder. There's no live sports. Trying to program all day, every day is very, very difficult as well. Any sign of any kind of a rebound for ESPN or the cable networks on the Disney side?
Actually, no. I think, in my view, the news was worse for the TV side. Advertising was not down that much, but we think it could be down as much as 40% in the June quarter. But more importantly, the numbers around cord cutting were worse than we expected. It looked like ESPN lost about 5.5% of its subscribers on a year-over-year basis. That's up from 4.5% last quarter, and that's only going to accelerate as the economic impacts of the outbreak really take hold.
Yeah, so what do we do? Do we pick up more shares of Disney, given that your price target is about 14% higher than the stock is right now, or just kind of wait and see how this all plays out?
Yeah, I think it needs more time. I mean, I think we have we don't have much visibility on the parks opening here in the U.S. As you said, the sports coming back, it's going to take a long time, we think, some of the sports are going to come back without crowds. We think this company has a lot of exposure to college football, which we think is less likely to play in the fall, and really the big driver of the economics, is ESPN and the
John,
media.
when you guys hold on, we're running out of time, but I want to jump in. I mean, when you guys, I'm sure you've got deep industry contacts. You think there's a chance there won't be a college football season?
Well, I think it's less likely than pros, right? These are amateur athletes. A lot of it's tied into a lot of the commissioners of different conferences have said that if there's not students on campus, if there's not students in the stands, we won't play. So that's a much higher bar than what you have with the NFL, where these guys are paid, they can be quarantined, they can play without spectators.